Hello and welcome to AE Accounting Tutorials. Today we are continuing our series on IAS 36, Impairment of Assets. In this video, I want us to look at a question on how to test for impairment of an asset, how to do impairment reversals, and how to allocate impairment reversals and impairment losses to individual assets. But remember, we have allocation of impairment losses and impairment reversals for a cash generating unit. But our focus here is on how to locate the impairment losses and impairment reversals to a single or individual asset. That is after we tested for impairments. But remember that in our previous lesson, we learned about the basic concept with regards to IAS 36. Is that okay? That has to do with the objective of the standard, the scope of this standard, and some basic terms that we need to understand as far as this concept is concerned. Is that okay? But before we go through the question, if you are new to this channel, I will encourage you to subscribe to this channel. Also comment on this channel for us to know where you are watching us from. Is that okay? Even before we tackle the question itself, because the question is on impairment reversals, we need to understand the concept behind impairment reversals before we begin to look at the question and solve it out. So let's look at the concept of impairment reversals. So when we talk of impairment reversals, what does it mean? Impairment reversals only occurs when there is an excess of the recoverable amount of an asset over its carrying amount. Is that okay? So when the recoverable amount is greater than that of the carrying amount, we have something we call impairment reversals. But before we will even reverse this reversal, there are certain criteria that we must meet before we reverse the reversals. So impairment reversal simply means carrying amount, recoverable amount being greater than that of the carrying amount of the asset. Is that okay? So let's look at some criteria that must be made before we reverse a reversal. Okay, so with the criteria for impairment reversals, we have four basic criteria that must prevail before we can reverse the impairment reversals. Okay, the first one I would like to talk about is that there must be an excess of the recoverable amount of the asset over its carrying amount. It means that the recoverable amount must exceed that of the carrying amount. This condition must prevail before we can reverse an impairment reversal. Is that okay? And two, there must be a previous accumulated losses. Okay, there must be previous accumulated impairment losses before we can do the reversals. So this is the first one. The second, there must be a previous impairment losses. There must be a previous impairment losses before we can reverse a reversal. Is that okay? So this is the second criteria that must be met. The third criteria is that the reversal is limited to the previous impairment losses. It is limited or restricted to the previous impairment losses. So three, so restricted to previous or accumulated impairment losses. So we say that there must be a previous impairment losses, and we are only restricted to the previous impairment losses. So what we are saying is that if the previous impairment losses is $2,000, our reversal is only limited to this. The fourth criteria has to do with the reversal can never exceed the recoverable amount of the asset. So can never exceed the recoverable amount of the asset. So recoverable amount. The reversal we are to do can never exceed the recoverable amount. Is that okay? Because we base on the recoverable amount to determine the impairment loss. Is that okay? So let's assume that the previous accumulated impairment loss is 2,000, and then we had impairment reversal of $3,000. The point 3 is saying that our reversal is only limited to the accumulated impairment loss. Is that okay? This means we can only reverse up to the maximum of this accumulated impairment loss. We cannot reverse more than this. Is that okay? So in these circumstances, we only reverse up to the maximum. So we only reverse up to the $2,000. But for instance, when we calculate for reversal, that is the excess of recoverable amount over the carrying amount of the asset to be, let's say, $1,500. It is lower than that of the accumulated impairment loss. So with this circumstance, we can reverse the whole of this 1,500. Okay. So the analysis is that we can only reverse the reversal up to the maximum of the accumulated impairment losses. So this is basically the dynamics of, or these are some criteria that must be prevailed before we can reverse an impairment reversal. As I said it earlier on, our focus on this video is to do impairment reversal and then try to allocate the impairment reversal to the individual assets. And the impairment losses too will be allocated to the individual assets. We are talking about individual assets, but we have circumstances that both the impairment loss and the impairment reversal will be allocated to a cash generating unit. So if we are allocating an impairment reversal to a cash generating unit, we do that on pro rata basis. Is that okay? And I will explain the concept of pro rata basis to you. Is that okay? Very good. But we exclude goodwill. We exclude intangible assets, for instance, goodwill, when we are reversing the reversal. And there is a reason for this. Okay, this is so because the IAS 36 view any increase in the recoverable amount of the goodwill after its recognition. Because of this, we don't reverse goodwill or intangible assets. Is that okay? So what you need to understand is that when we talk of reversal, okay, for goodwill or intangible assets, we don't reverse the reversal. Is that okay? Because of this particular reason. So you have to take note. But when it comes to the other net assets that are the tangible non-current assets, we reverse the reversal based on pro rata basis. Okay, so for reversal of entries or reversal of impairment, we add it back to that of the carrying amount of the asset to arrive at the recoverable amount, because it is the recoverable amount of the asset that we recognize in the statement of financial position. So if the carrying amount of the asset happens to be $2,000, is that okay? And then we have an impairment reversal to be 1,000. Then we only added the reversal back to the carrying amount to arrive at 3,000, and this becomes the recoverable amount that we will recognize in the statement of financial position. Okay, that is for impairment reversals when we are allocating it to the individual assets. But on the other hand, when there is an impairment loss, okay, for impairment loss, we also subtract the impairment loss from the carrying amount of the asset to arrive at the recoverable amount. So this is what I'm talking about. So when we have the carrying amount to be, let's say, 2,000, we have impairment loss to be 500. Because it is an impairment loss, we take the impairment loss from the carrying amount of the asset to arrive at the recoverable amount of 1,500. And this amount will be recognized in the statement of financial position. Okay, because the IAS 36 states that all assets should not be recognized above its recoverable amount. So we recognize this. So this is how we go by it. So I'll just want us to go through the question and try to solve to enhance our understanding on testing for impairment of assets. I believe when we begin to solve the question, you actually get the concept or the analysis I'm talking about. So let's go to the question and see how we can test for this impairment. Based on the following information, which relate to Vero Limited, we've been given a very nice table with the name of the assets, the original cost, accumulated depreciation. As at 31st December 2021, we have accumulated impairment. 31st December 2022, we have the fair value of the asset and we have the assessed value. I keep telling you the assessed value is the value in use or the entity specific value of the asset. So we have, as you can see on the table on your screen, we have land and building with its amount as follows. We have 200,000 cedis as original cost, 50,000. We don't have any accumulated impairment. We have 135,000 as fair value. Then we have 132,000 as assessed value. We have plant and machinery as well. As you can see, we have motor vehicles, we have furniture and fittings, we have equipment, and we have goodwill as well. Goodwill cost is 100,000, accumulated depreciation 40,000, and we have no accumulated impairment for goodwill. We have a fair value being 38,000, then we don't have assessed value. Okay, the company depreciates assets at the following rate: building 2% on cost, plant and machinery 10% on cost, motor vehicles 10% on cost, furniture and fittings 10% on reducing balance, equipment 10% on cost. Goodwill was acquired in January 2020 and it was planned to write off in 5 years. Required: A. Calculate the impairment loss, if any, for the year ended 31st December 2022. Determine, if any, the amount of impairment loss reversal as at 31st December 2022. Okay, so we are to calculate for impairment loss and also determine impairment reversal. But after doing this, I would like us to do the allocation as well, how to allocate the impairment losses and impairment reversal to the individual assets. We will do that as well. Okay, and the B part is saying that we should also mention any four indication that suggests an impairment of assets, and we've learned this in the part 1 of this video, so you can refer to get the answers from there. So our focus here is on the calculation. All right, so to be able to test for impairment for this individual assets, I would like us to use a very nice table to present it in a formal way to enhance our understanding. Is that okay? So we have Vero Limited. Okay. We've been given the asset, the name of the assets. Then we've been given the cost. After the cost, we've been given accumulated depreciation. Accumulated depreciation. After that, we've been given accumulated impairments. Okay, so these two amounts will help us to get the carrying amount of the asset. So carrying amount. After ascertaining our carrying amount, we have to also determine the recoverable amount. After determining the recoverable amount, then we go for impairment loss. So we can say impairment loss. After that, then we go for impairment reversal, if any. All right, so I'll bring my currency sign. Okay, so this is a formal way to present this analysis. So this is a formal way to test for impairment. So we go for the name of the asset. We have land and building. Then we have plant and machinery. After that, we have motor vehicles. From there, we have furniture and fittings. From there, we have equipment. Then we have goodwill. We have goodwill. Okay, because of the goodwill, I would like to create a portion for amortized value. Okay, so let me fix it here. Amortized value. Because we don't depreciate goodwill, so amortized value. All right, so the cost is for this is 200,000, 300,000 from the question, as you can see on your screen, then 400,000. From there we have 200,000, we have 150,000, and we have 100,000. All these are given in the question, the cost. We've been given accumulated depreciation from the question, okay, but we've been given a rate to calculate annual depreciation. So to get the total accumulated depreciation for 2022, we have to calculate the annual depreciation and add it to the accumulated depreciation. Is this clear? So for depreciation for land and building is 50,000, the accumulated is 50,000. We've been given a rate to calculate for annual depreciation before we add it to the accumulated one to get a total accumulated depreciation. So we've been given a building at a rate of 2%. Okay, so we calculate the 2% on the cost. Okay, when we calculate 2% on 200,000, you get an amount of 4,000. Is that okay? That is 2% on the cost of the building, and this will give us 54,000. So the total accumulated depreciation will be 54,000 for building, land and building. Is that okay? So when we come to plant and machinery, the accumulated depreciation in the question is 80,000, and we've been asked to calculate 10% on cost, meaning that we are calculating the 10% on the 300,000. So when we calculate 10% on this, we will get 30,000. Okay, so when we add these two, we can get an amount of 110,000 as the total depreciation. This is the annual depreciation, the annual, and the previous accumulated depreciation. So we add the two to get the current accumulated depreciation. So we do same for motor vehicle, and the rate is 10% on cost. So the initial accumulated depreciation is 50,000. We calculate 10% on this, and this will give us 40,000, making a total of 90,000. So the accumulated depreciation here is 90,000. Is this clear? All right. So we move to furniture and fittings. But for furniture and fittings, we've been given a 10%, but on reducing balance method. Is that okay? When we are asked to calculate depreciation on a reducing balance method, we first of all subtract the initial accumulated depreciation from the cost before we apply the rate. The rate is 10%, and the initial cost is 200,000, and we have a previous accumulated depreciation in the question that is 90,000. So we strike this out to get 110,000. From here, this becomes the net book value or the carrying amount as at the beginning of 2022. Then we apply the rate of 10% on this. This can give us 11,000. Is that okay? Then we add this annual depreciation to the accumulated. So when we add these two, we will get an amount of 101,000 as the total accumulated depreciation. Is this clear? All right. So from there we move to equipment. That is 10% on cost. So 10% on cost, and the cost is 150,000 Ghana cedis, and 10% on this will give us 15,000. And then we have accumulated depreciation from the question being 50,000. Is that okay? So we will add these two. When we add the two, we will get 65,000. Is that okay? Then we have goodwill, and they say that goodwill was acquired in January 2022, and it was planned to be written off in 5 years. So we have to amortize the goodwill, and the cost of the goodwill is 100,000. By amortizing, we amortize based on the estimated useful life of the goodwill. That is 5 years. Okay, so when we amortize this, we will get 20,000 as an annual amortized value. But remember that goodwill was acquired in 2020. So from 2020 January to 2022 December is 3 good years. So to get the accumulated amortized value, we multiply this by the 3 years. This will give us 60,000 as the accumulated amortized value. So we will not write it here, we will write it here, because an intangible asset we don't depreciate, we amortized. So we have 60,000 as the amortized value for goodwill. So after we've gotten our accumulated depreciation and that of amortized value, we take the impairment losses from the question. So for land and building, there is no accumulated impairment. For plant and machinery is 30,000. We have 40,000 for motor vehicles. Then we have 15,000 and 20,000 and 15,000. Then we don't have for that of goodwill. And to get the carrying amount, we've already established this in our previous video. We said that carrying amount of an asset is cost less accumulated depreciation less accumulated impairment. This is what we've established earlier, and we have our accumulated depreciation, our accumulated impairment. It is just a matter of taking it out from the cost to arrive at the carrying amount. Is that okay? So when we take this from the cost, we arrive at 146,000. When we add these two figures and subtract it from the cost, 160,000. These two from here, we will get 270,000. Then we add these two, subtract it from the cost, and this will give us 79,000. Then we also add these two amounts. So let me bring this at the bottom, 15. We add the accumulated depreciation to the accumulated impairment and take it from the cost, and this will give us an amount of 80,000. We have amortized value of 60,000. We take it from the cost of the goodwill. We arrive at 40,000. Let me bring this here. So we are done with determining the carrying amount of the assets. So after we've determined the carrying amount of the asset, the next thing is the recoverable amount. And we've established that a recoverable amount is the higher of fair value less cost to sell and the value in use. So we have fair value less cost to sell, and we have the value in use. In the question, it is assessed value. It's the same as the value in use. So the one which is higher, we push it forward as the recoverable amount. So recoverable amount, it is the higher of the fair value less cost to sell and that of the value in use. But here we only have a fair value straightforward, so we don't have any cost to sell. So we only compare the amounts and pick the higher one as our recoverable amount. So when we compare the fair value for land and building being 135,000 and 132,000, the fair value is the higher, so we go for the fair value. So 135,000. When we come to plant and machinery, we compare, and when we compare, the assessed value or the value in use is the greater of 152, so we go for 152 as the recoverable amount. We do same for motor vehicles, and with motor vehicles, the fair value being 340,000 is the higher, so we go for 340. We go for furniture and fittings. We have 84,000 and 80,000, so the fair value is 84,000, so we go for 84,000 for the recoverable amount. Then from there we look at the equipment. The fair value is 100,000, assessed value is 120,000. Assessed value is the higher, we go for 120,000. From there we go for the goodwill. Goodwill has a fair value of 38,000 and 0 for assessed value, so we go for the 38,000. Okay, so this is how we determine the recoverable amount. The higher of the fair value and then that of the value in use or the entity specific value. So from there we determine our impairment loss. Impairment loss is calculated as a carrying amount minus the recoverable amount. So if the answer is positive, then that is an impairment loss. That is, if the carrying amount is greater than the recoverable amount, the answer is impairment loss. And then when the recoverable amount is greater than the carrying amount, then the difference is what we call impairment reversal. But remember, with the impairment reversal, we base on certain criteria to reverse the reversal. And we've talked about that, so we will do that along the line. So when we take the recoverable amount from the cost, when we subtract the recoverable amount from the carrying amount, the difference is 11,000. Because the carrying amount is greater than the recoverable amount, you have an impairment loss. The second one, the carrying amount is still greater than the recoverable amount, so you have an impairment loss of 8,000. When we move to machinery, the recoverable amount is rather greater than that of the carrying amount, so we have an impairment reversal of 40,000. But remember, the difference is 70,000. And why are we reversing 40,000? We are doing this because of certain criteria. We learned that we can never reverse the reversal above the 8 accumulated depreciation. 8 accumulated impairments. We can only reverse the impairment reversal to the maximum of the accumulated impairment. So the maximum here is 40,000. So we reverse up to the 40,000. Is this clear? All right. So for furniture and fittings, when we compare these two, the recoverable amount is greater, okay, with an amount of 5,000, and the 5,000 is even lesser than that of the accumulated impairment, so we go for the 5,000. Is that okay? Then we move to equipment. Equipment, when we compare the two, we realize that the recoverable amount is greater than that of the carrying amount of an amount of 40,000. But when we consider the accumulated impairment, it is only 15,000, and we cannot reverse beyond the accumulated impairment, so we go for the 15,000 as the impairment reversal. Okay, now we can check for goodwill. We've realized that when we compare these two with goodwill, the carrying amount is greater than the recoverable amount, so that is what? A loss, impairment loss, and we have to determine that as such. So the difference is what we call 2,000. But if this happens to be an impairment reversal, we wouldn't have done this. If this is greater than this, we will leave it as such because we don't reverse goodwill or intangible assets. So with this, we are now done with the entries. So we can sum this up to determine the total impairment loss of 21,000, the total impairment reversal being 60,000. Okay, so after determining this, the disclosure requirement has to be known. That is how we need to treat it in the statement of financial position. The impairment loss will be written off against the income statement as an expense. So this will be treated as an expense in the income statement or statement of profit or loss. Then when we come to the impairment reversal, this will be treated as an income in the profit or loss. Okay, so this is income. All will be treated in the income statement. All right, so after we are done with the requirement, I want to add another requirement to enhance your understanding by trying to see how we can allocate the impairment loss and the impairment reversal to the individual assets. Is that okay?